I'm Kimberly Roosh, and I am the current acting president for the UGFOA this year. And our board members that we have present with us participating today is Jim Clayton, Brandon Nilsson, and Kim Coleman. And we had to excuse Cherie and Jessica were not able to participate today. So without further ado, then we have Jim Clayton. He works with the sales tax distribution for the Utah State Tax Commission. He'll be our presenter today. And Jim graduated with a degree in accounting from Westminster College. After graduation, he worked in public accounting and in private industry for 9 years. In 1992, he began working at the Utah State Tax Commission as a centrally assessed property appraiser, specializing in the appraisal of airline and railroad companies. In 1996, he accepted the position of sales tax distribution manager, overseeing the distribution of over 40 different taxes to over 290 local entities. He and his staff are also liaisons with local governments on sales tax and distribution issues. And in the time he's been in sales tax, Jim and his group have distributed over $19 billion in sales tax and sales related taxes to localities in Utah. When Jim's not distributing taxes, he enjoys gardening, hiking, camping, woodworking, and spending time with his family, especially his 11 adorable grandchildren. And we're also very grateful to Jim for his service as a member of our UGFOA board. So I'm going to turn the controls over to Jim now, and then he will get started here.
Okay, I'm unmuted. I don't see how I can share a screen yet, though. Is my screen there now, Kimberly? Okay. Thanks for inviting me, and thanks to all of you for attending. I hope this is informative. I hope it's fun. Like Kimberly said, if you have questions, please ask them at any time during the presentation. She'll get them to me and I'll do my best to answer them. If I don't know the answer, I'll make up an answer. If it's not the right one, I'll get back with you later.
Jim, could I ask you real quick, while you had stepped away, I stopped the video on your side. Would you go ahead and just start sharing your video again too, so that we can just keep a face to a name as you do your presentation for us?
I'm sorry, I didn't. Am I not screen sharing? Is that the problem?
You are screen sharing, but I also, down at the bottom, I want you to start your video, if you could.
Okay.
So your camera. It should be down at the bottom where you mute your microphone. Sorry about that.
There I am.
Okay, great. Thanks, Jim.
Okay. All right. So again, questions, please. Because some of this is, you know, second nature to me. If it doesn't make sense, I'll try my best to explain it. And there we go. This technology is a little bit new to me, and so if you'll be patient with me as I struggle with two screens, one screen that you can see, one that you can't. Anyway, so here's today's agenda. We'd like to talk about sales tax and COVID-19. I think we all know a lot about COVID-19, but let's look at where we've been, where we are now, and what might be ahead of us. If we have time, we'll talk a little bit about soda. And all along the way, there will be some local trivia mixed in, and please pay attention because there will be a quiz, and in order to get your CPE, you'll have to be able to answer all the trivia questions. First trivia, Cannonville down in Garfield County is sometimes called Gunshot because it's not big enough to be a cannon. Cannonville occupies about 2.6 square miles and has a population of 173. So, timeline. Of course, we started hearing about COVID-19 way back November, December timeframe of last year. Hearing about the outbreak in China and how deadly it could be. And so we started preparing way back then. But here in Utah, I don't remember the exact time, but you'll all recall that you went to the grocery store or to your Walmart or wherever and saw that you couldn't buy any toilet paper, face masks, and a lot of food. And so on February 27th, Dr. Angela Dunn, the state epidemiologist, discouraged people from hoarding or stockpiling those items. On February 29th, we got our first case in Utah. This person came in from California. And at the same time, stockpiling of bottled water was also discouraged. On March 6th, Governor Herbert declares a state of emergency. On March 12th, Governor Herbert recommended that gatherings of more than 100 should be canceled. And of course, we did cancel our little meeting. And on March 14th, the first community spread was confirmed. Then in the middle of March, things really got ugly, I would say. On the 15th, we had the ski resorts, convention centers, concert halls, planetariums, libraries, golf courses, and all kinds of, anything where you could gather were being closed down. Salt Lake County ordered restaurants to stop serving inside. And on the 16th of March, we did officially cancel our spring conference in St. George. And then on the 17th, the state followed Salt Lake County's lead and ordered restaurants statewide to stop serving inside. On March 18th, to make it interesting, and of course, we didn't have enough on our plates. For those of us here in Salt Lake County, we had a nice little earthquake. March 22nd was the first fatality. And then on March 27th, Governor Herbert issues a stay-at-home order. Then things kept closing. Zions Park was closed. On April 17th, the governor issued the color-coded system of guidelines. The state started off in the red level, which was a whole lot of closure, a lot of restrictions of public gatherings and so forth. But by April 29th, we moved from red to the orange, and we were allowed gatherings of 20 or fewer. By May 16th, we were in the yellow area, except for some of those localities that you see there, Wasatch, Summit, Grand counties, and West Valley and Salt Lake cities. On the 17th of June, the governor releases his fourth version of Utah Leads Together plan, focusing on a full-blown recovery. A little bit of good news out of all this is that between week 25 and 26, the percentage of deaths attributed to pneumonia, influenza, and COVID-19 dropped from 9% to maybe we're seeing a light at the end of the tunnel or holding out some hope. Okay, I'm going to need some help from people in southern Utah. Hurricane. Now, those in Washington County know that that's not how you pronounce that. They pronounce it Hurricane. But this name was given to the town by Mormon apostle Erastus Snow. As he was riding into town, a whirlwind swept the top off his buggy. he exclaimed that the wind was a hurricane and dubbed the area Hurricane Hill. Okay, so this is what I'm sure you've all been waiting for. This is what you missed down in St. George. And I kind of plagiarized a lot of these from Scott Stevens, who normally does this. But if we look at our distributions, you can see for the last 8 fiscal years, we've seen a steady increase in sales tax revenue distributions. The blue part of the graph represents the local option, or the 1% tax. The red represents all other taxes, including things like municipal telecom, 911, the liquor distribution, and all of the boutique taxes like transient room and restaurant. And if we compare total distributions by month, we see that the red bar represents fiscal year 2020. And we see growth in every month during this fiscal year, with the exception of April. And actually, April would have had an increase too, except that there was one taxpayer whose payment somehow wound up in the error file, didn't process properly, and was not corrected until the May distribution. So in reality, we did show increases every single month in fiscal year 2020. This is a listing of all of the combined rate taxes, excluding all of the boutique taxes, such as the restaurant, transient room, short-term leasing, and things like that. Don't be too concerned about the 3 that are marked additional transit for the county, for the local, and the district. There was a change in the methodology of how those taxes were distributed, which skewed these numbers when we compared June of 2019 to June of 2020. But what you can see here is that, and I've sorted these in order of percentage change. You see that the county option and the one just below it, sales, which is the 1% local option, both increased over 7.3% for the local option sales. Some of these other taxes, the resort tax you see took quite a hit. Rural hospital also took a hit. City or town option and the correctional facility all took some hits. Town option is so small that is probably insignificant statistically speaking. But the thing that's interesting about this analysis is that you see that the smaller communities, such as the rural hospital and the resorts, are the ones that got hit the hardest, probably because of the tourism factor and the closure of restaurants and everything else. More trivia. Helper over in Carbon County got its name from the extra locomotives that were stored there. They were called helper engines, and they helped the loaded trains get up the steep grade to the Soldier Summit. Every month when we begin the distribution process, we do an analysis, and it's called the top 100. And that's a bit of a misnomer because it actually consists of the 100 largest combined rate sales taxpayers plus 105 locally important taxpayers. In other words, if a city has one taxpayer that they're very interested in, we've included them in this list as well. And we go through this list and make sure that the top 205 in this case have all filed and paid so that we have the best distribution possible. So for this analysis today, excuse me, we're going to compare April of 2019 to April of 2020 filing periods. Not necessarily a distribution period, but the filing period. So this would affect mostly the June distribution. So between April of 19 and April of 20, we saw a $2.1 million increase for these 205 taxpayers, which represented a 1.353% growth in their total tax collected. Total tax collected meaning the state, local, mass transit, county option, and all the other taxes that they collect. Among the 205, there were 84 that we call winners. They increased their total tax collections by $22 million. And the largest winner increased their sales by over 2.7 million. This taxpayer was in the electronics and appliances category. There were 121 losers for a total of $20 million. The biggest loser here was only $1.04 million, and just coincidentally was in the same category as the largest winner, electronics and appliances. Now, scattered among these 121 losers were five accounts that reported taxable sales in 2019, but their return for 2020 showed zero taxable sales. And that's not hard to believe, since City Creek closed in March. And so this store was located in the City Creek Mall. Some of them were. But of the 205, about 33 of them were in the tourism and entertainment industries. Tourism meaning restaurants, hotels, short-term leasing, car rental agencies, and also the ski resorts, the sporting events, and other entertainment like that. These 33 accounted for $6.2 million of the decrease of the losers. And they also accounted, there were also 3 fast food restaurants that were among the winners. So the restaurants didn't close down completely. And they helped keep the top 100 afloat. Now, I did the same analysis for the May filing period, but this is very, very preliminary because we haven't had a chance to look at those who may be in the error file, who may have problems with their payments. But as of today, tentatively, there are only 185 accounts included. I eliminated anybody that had zero for both 2019 and 2020. So for the top 185 now, we're showing an $8.5 million increase for the May filing period, 7.6% increase. There were 100 winners for $21.9 million. The largest winner was $3.46 million. And this isn't an electronics and appliance firm. This one is an online retailer. So online retailing is alive and well, especially during this pandemic. 85 losers, losing only $13.4 million. If you remember the previous slide, the losers lost about $20 million. So, and these are the same taxpayers for month to month, for the month of April and the month of May. So some of those may have turned around already. Again, a more thorough analysis would prove that out. The biggest loser is only $1.3 million. And that was not an online retailer or an appliance store. This was a car dealership. Now looking at only the local option tax, this is what the local option looks like over time. And you can see the trend line shows a steady upward trend. We are gaining. We had the little dip in April because of the one single taxpayer, a bigger dip than what we normally would have, I should say. But you notice that the May distribution, the second to the last spike, if you can see it, isn't as high as the February spike. And that's when the COVID started kicking in, possibly. But overall and generally, we are still on the upward trend. Now looking at local option month by month for 3 fiscal years, you see that we're still growing, again with the exception of April. So let's now compare what happened between June of 19 and June of 20. In local, I'm going to break this into 2 different analyses: local point of sale and total distribution. Local point of sale would be the brick and mortar, the online retailers, and private party motor vehicle sales. For the month of June, we increased over last year almost $3.6 million in local point of sale, from 49 million to almost 53 million, representing a 7.24% increase in point of sale from one year to the next. Of the localities in the state, 212 showed an increase in their point of sale, for a total of $5.7 million increase, with 76 localities showing a decline, $2.1 million in decline. Now, compare that to the total distribution. Total distribution is after the 50-50 population split, and people have received their population share of the statewide pool. That distribution increased 7.3%. The reason there's a disparity there would be because there are things added after point of sale that are allocated, such as charitable refunds and non-nexus taxpayers that would affect the difference there. You see the difference. There were 237 localities that actually received more money in 2020 than they did in 2019. And only 49 of all of our localities got less. And just for trivia's sake, West Jordan was the winner in both categories. West Jordan increased its point of sale by 267,000 and increased its total distribution by 187,000. Salt Lake City, on the other hand, was the biggest loser for point of sale, losing 451,000, and Murray was the biggest loser for total paid, losing 163,000. The thing that I think affects this, and again, more research, but big box retail and other big ticket retail items would affect West Jordan more than the other localities. The losing localities would be those.
Question.
Okay.
The information that you're displaying, are those tax dollars, not just sales dollars, correct? Not sales dollars, but actually sales tax dollars.
Yes, these are, if y'all heard the question, are these tax dollars or taxable sales? This is actual distribution to locals.
Thank you.
And you'll bear with me, I'll try to be clearer because I'm going to be covering some slides where we're talking about taxable sales and some slides that'll be talking about tax collections. This slide is actual tax collection, local option distribution, what was actually sent out to the locals.
And Jim, while we're just at this interruption point here with this question, would you mind starting the poll on the bottom of the screen to just have everyone, it'll just pop up for people to check in if they need to for CPE, since you're the host right now.
Let's see.
It should be on the bottom of your screen where the Q&A option.
It's actually at the top of the screen.
Sorry. And
there.
then we'll just perfect. And then we'll just launch one more at the end there. Thank you.
Okay. Looks like people are responding.
Great.
So, one last note on this. Look, the losing locals looked like they were they had quite a high concentration of in the tourism industry, also auto dealerships. So those are the segments that were hit hardest. Now, if you'll pardon the professional picture that we've got here, this is an article that we came across from the Tooele Transcript Bulletin yesterday. We weren't able to view it online, so my son went to 7-Eleven. My son lives in Tooele, by the way. Went to 7-Eleven, bought the newspaper, and took pictures of the entire article and sent it to me. And so but as you can see from the headline, sales tax revenue increase has officials perplexed. How many of you were expecting huge deficits or huge decreases in June and July? Tooele County was expecting huge declines, but wound up actually getting more than what they budgeted for and what they were planning on. The article points out maybe a couple theories. I don't know how accurate they are. The stimulus money that was sent out to everybody might have had an impact. Unemployment benefits, panic buying definitely added to some people's, some stores' bottom lines for that month. But there's no real way to tell. The other theory that I heard while I was talking to somebody else about all this was that the predominant religion here in Utah has counseled its members for the longest time to be prepared for a rainy day, to save up. Maybe a lot of people were listening. Maybe that's the case. A little anecdotal story here. This whole thing of the increases, I had an economist call me, a private industry economist call me, and really questioned that is there any way that we had an increase with all the COVID going on? Are you sure that your systems are correct? Was there a mistake in processing? And I had to just assure him that I didn't see anything wrong, that yes, indeed, truly there was an increase in sales tax distribution. And getting back to who was hit the hardest, Utah has 19 resort communities. Now, when I say resort communities, I don't mean actual resorts. I mean localities who have imposed the resort communities tax. And these 19, when you combine their distributions from June of 19 to June of 20, they accounted for their total distributions decreased 26%. 13 of the 19 actually decreased, and 6 saw modest increases. The 6 that had the increases you would not consider to be destination resorts such as Park City or Alta, but are kind of obscure resorts. But all of the resort communities that have a ski resort, all of them saw declines. Again, talking about just their local option distribution. So how did we do? Now we're going to switch from distribution dollars, taxable dollars, or tax dollars to taxable sales. Excuse me, I got a little bit of a dry throat today. You see that overall, for the month of April, comparing April of 19 to April of 20, overall taxable sales increased 2.5%. But some counties were winners and some were losers. And you notice the biggest losers were the heavy tourism area counties, such as Garfield County and Grand County, Summit County, Uintah County, Kane County, and Salt Lake City Salt Lake County, excuse me, to an extent, although Salt Lake County only showed a very small decrease. So as of today, this morning at 7 a.m.
Jim, looks
Yes.
like we have one question from that last slide really quickly. This was from Austin Ballard, and how are the sales tax numbers comparing? How are the sales tax numbers comparing to income tax collections for the periods we're looking at? And will this data have any impact on Utah tax reform?
I can't speak to income tax at all. If it's not a sales tax, I don't know much about it. Also keep in mind that we won't really know the impact of income tax until next April or so. For this year, for the 2019 filing period, those numbers have probably already been set in stone as far as what people owed in taxes. So I don't know that there's going to be a correlation between income tax and sales tax, especially where sales tax is a monthly, quarterly thing and income tax is an annual thing. Did I answer the question well enough?
Yes, thanks, Jim.
Okay. All right. So going back to where are we as of right this minute? As of right now, if we were to do distribution today, we'd be distributing over $50 million to the local option sales and use tax. I have not looked at the mass transit, the county option, arts and zoo, and so forth. But on similar dates in June of 20, when we had 7 business days left to distribution, we were at $45 million. And a year ago, 7 days before distribution, we were at $44 million. So this indicator is, kind of shows that we are doing okay for at least the month of July. We'll have to see what the future periods bring, if there are any more impacts. Now, just for what it's worth, just before this meeting, my wife had the TV on in the other room, and Governor Herbert was giving some updates. I didn't get to hear everything, but the numbers were not sounding all that cheery. So we'll just have to wait and see if the economy is still coming back or if we're going to have another setback. Revisiting the tourism taxes, if we look at overall the three tourism taxes that we've identified, transient room, restaurant, and short-term leasing, you'll see that generally the red bar, which represents fiscal year 2020, which we just completed, generally shows growth until we hit April. And then June showed a huge decrease in overall distributions for the tourism taxes. If we look at the individual components, excuse me, this is the same slide from 2019. No, this is the, well, excuse me. If we look at all three taxes individually for 3 fiscal years by month, you'll see that the April and the May and the June distributions did show a bit of a decrease in 19. But the next slide that we're going to look at is the most recent year. If you'll pay attention, especially to the May and the June columns there, you'll see that everything in May and June dropped, especially the red bar there, which is the transient room or the accommodations. Short-term leasing dropped to an all-time low. The restaurants were probably kept alive and didn't suffer as big a loss as the accommodations and the short-term leasing because they still had the ability to have customers drive through. More trivia. Tickaboo, if you know where Tickaboo is, it's on your way to Bullfrog Marina at Lake Powell. Tickaboo means friendly in Paiute, but any name that rhymes with peekaboo really is kind of a winner in my book. Okay, switching gears. Now we're going back to total taxable sales. This comes from the US Census Bureau and shows only for the retail sector, you know, the NAICS codes, the retail sector for April 19 compared to April 20. And you'll see that across the board, almost nationwide, we're showing decreases in taxable sales by NAICS code, with the exception of building materials and food and beverage stores, and a couple other small things. I can't read my small screen, so. And also the non-store retailers, which would include not only the online retailers, but also those who deliver locally, such as, I don't think we have a lot of these, but the home fuel deliveries, heating oil and so forth. So that's how we did as a nation. Nationwide, we decreased our taxable sales by about 15%. Now Utah, taking the same data from the Tax Commission website, the Economic and Statistical Unit page, a little bit of a different story. You see here that we have an increase of 2.5% in total taxable sales. And if you remember the previous slide, the retail this is only the retail for the US, 15.3 decrease, but we showed an increase in the retail of 11.38%. So Utah is a little bit better off than the rest of the nation. Now here's the Utah retail sector. And I've highlighted the biggest winners. You see that the building material and the food and beverage stores and the non-store retailers really did well. And compared to the national, we did better than almost every category than the nation did. Again, the losers here were the furniture and home furnishings, electronics and appliance stores, health and personal care. You'd think that would go up in a pandemic, but it actually went down. And clothing accessories went down. I suppose partly because, well, I don't need any new slacks to go to work because I'm sitting here in my jeans, my fuzzy slippers. I don't need to dress up for work, and we're not sending our kids to school, so maybe that's part of that. Going back to the entertainment, the tourism part of our economy, you can see that in Utah, that particular segment took a huge hit. 72% in the arts and entertainment and recreation, accommodations down 87%, restaurants down 36%. The nationwide data was not available for anything but the food and drinking places, and nationwide they showed a 52.56% decrease, and we only showed a 36% decrease. So we're actually, again, better off than the rest of the nation. And here's a little more detail of the boutique taxes, the tourism taxes. You see that overall we decreased 54%, 52% in the four different taxes that we're talking about here. Now, how did we do compared to the rest of the nation? In the left column, under Utah, of course, is how we did as a percentage increase or decrease over last year in the US. And you can see that in every category, with the exception of health and personal care stores, we did much better than the rest of the nation, especially in the building materials, garden equipment, and in the food and beverage stores. Non-store retailers, the same story. We really did quite well compared to the rest of the nation. Okay, Levan. Some say that Brigham Young gave Levan its name. They said that Young had a sense of humor, and since Levan was in the middle of the state, he just decided to name it Naval backwards. So now with all the numbers and charts behind us almost, where do we go from here? Well, we have a couple of options to help us see where we're going. We can either use our trusty dartboard or our trusty crystal ball. I think both of them are equally reliable. But I think in a conversation that I had earlier today with somebody, there's just not enough data available, at least from a distribution standpoint, to tell us where we are going. So we leave the forecasting up to those who are much more skilled in that area. Remember, past performance is no guarantee of future results. That goes not only for the bad performance, but also the good performance things might get better from here, things might get worse from here. And the sentiment is prepare for the worst, but hope for the best. There's a lot of good information that you can access, and I've given you 3 websites here. And again, this presentation will be included on the UGFOA website, and if I can also include the PowerPoint presentation. But a lot of the information that I got about taxable sales came from tax.utah.gov, econ stats, the tax return data. The tax collections came from econ stats sales, and then the short run economic forecast, and we're going to see that in just a minute here, came from the Governor's Office of Management and Budget. And so this next slide shows you a portion of the revenue assumptions work group forecast, which came out in June. I've highlighted at the bottom those areas that are probably most germane to this discussion today. They forecast an overall taxable retail sales of 8.1% increase, and in 2021, a 5.9% increase. That was taxable retail sales. All taxable sales for 2020, they forecast only a 0.3% increase, and in 2021, a 6.3% increase. Now this forecast superseded the forecast that was done in February, where retail went from 8.2 down to 8.1 for 2020, and 5.2 increased to 5.9 for 2021. More trivia. Elmo in Emery County was settled by the families of the Ericksons, the Larsons, the Mortensons, and the Oviots. So they took the first letter from each name to give it its name, Elmo. As I was pondering this, I kind of thought, well, they could have also named it Mole, but they didn't. Deseret News published an article on June 17th saying that Utah is more resilient than excuse me, I just had an alarming message pop up. My internet connection is unstable. Anyway, the retail sector of the once soaring Utah economy is proving to be much more resilient to the economic impacts of COVID-19 than most of the rest of the country, with some segments even flourishing amid the unprecedented circumstances. And then Governor Herbert, in the same article, was quoted as saying, "I think we have an opportunity to be optimistic that we are on the road to recovery already. We've had better success than most any state in America." And looking at our the distributions for the first 2 months of the pandemic, first 2 full months, we are seeing that we are in pretty good shape. We're not seeing the great decreases or declines that everyone was expecting. Then on June 19th, this article was also published in the Deseret News. Utah is way ahead of the curve in dealing with budget impact of COVID-19, and this is coming from a Trump economic advisor. Stephen Moore is Donald Trump's economic advisor. He was addressing the Utah Taxpayers Association annual conference on the 19th. Among some of his quotes, he says, Utah's tax collections have not been hit as hard as other states. He said he credited that to not shutting down our economy entirely to stop the spread of the coronavirus. He said, you managed to balance your budget. You've acted in a fiscally responsible way over the last 10 years. You have a rainy day fund. He says, Utah is way ahead of the curve. He says, you do a lot of things right, not everything right, but you do a lot of things right, especially compared to your neighboring states. So that's commendable. So there is room for optimism. And again, that's borne out here. We saw this slide before where the rest of the nation in the retail sector decreased 15%, we increased 11%. So we're in not too bad a shape. Okay, as of right now, so far, are there any questions?
I don't have any outstanding questions that are popping up right now, but now would be a good time if you guys have them to go ahead and type them in the Q&A and we can get Jim to address those. We did have a great comment though from Patricia Nilsson. She said that she loved the local trivia. Thanks, Jim.
You are welcome. Okay, I will proceed, and I will, if there are questions that come in, I'll circle back and we'll address those. One thing I know Scott wanted to talk about, and I was actually quite eager to talk about too down in St. George, was this next trivia question. Now this is where, this is actually a quiz. The two small towns of Dragerton and Columbia were merged to form what city? If you know the answer, feel free to raise your hand, or seeing none, I'll give you the answer. Well, Spencer Evans looks like he knows. East Carbon, which is really intuitive because I would have guessed Columberton or Dragumbia or maybe even Cold Drag. One thing Scott was going to talk about, and I was eager to talk about too, was our new process for distributing sales tax data for our monthly distribution. Sales Online Distribution Access, SODA. So let me give you a little bit of history of sales tax distribution and disseminating of the information. I started with sales tax distribution in 1996. There is no written history of sales tax distribution before that time, although, and I made a joke about this in a newsletter a little while ago, that before my time, the distribution was written out in longhand on parchment paper with charcoal and then disseminated to the locals using Pony Express. But I can find no documentation to support that. But in 1996, we mailed only paper reports to 263 local entities. The monthly distribution process was a 3-day process where we would submit different job cards to the computer each night and print out a bunch of paper. We'd print out about 10 or so reams of paper every month, discard about 7 reams and mail out 3. Very time-consuming process where we had to go through and sort each report into its, for each city or town. So in 1997, I say that floppy disks were introduced. We started using floppy disks as a way of disseminating information to the locals. At that time, less than half of the localities were using the disks, and we were still sending out 147 paper reports. It saved on some paper, but not much. In 2008, we implemented a new sales tax system, GenTax, which really streamlined, was quite an improvement to our processing. It really sped up the time it took to get a distribution ready. Just also anecdotally here, about that same time, because we saw the economies and saw the efficiencies of the new system, we moved the distribution date up from the 25th of the month to the 20th of the month. Then in 2009, a new process was introduced where we would send out a secure email containing all of the distribution files and reports. But we only had 248 of the 275 entities receiving the secure email. We still had 27 localities that still wanted to get paper reports. Now this says September 2019, SOTA goes live. SOTA actually had been somebody's idea for quite a number of years. Scott and I had been talking about it for at least 3 years before 2019. It never really got off the ground. But finally, somewhere towards the end of 2018, middle of 2018 to the end, a series of unfortunate events kind of prompted us to pursue it more fully. And so starting in January, we had our vendor who manages or oversees the GenTax program worked together. It had 4 programmers working together to put together this process where instead of us mailing you stuff, you come to us and retrieve your own sales tax information. And so that went live in September of 2019. But between January and September of 19, there was probably thousands of man hours that went into the programming and testing and verifying to make sure that everything went exactly as we wanted it to go, that everybody got what they wanted and was able to get everything they needed. With the implementation of SOTA, there was no longer a need to print paper reports, and we mail no paper reports anymore. In September, we created 410 SOTA logins. This was based on the email addresses that we had for the secure emails. But of those, 145 were closed in December due to inactivity. And I'll note here that any account that is not accessed for 90 days will be closed. And so it's important to access your account regularly, download the files that are available to you, and keep your account active. This is just a screenshot of if I were Riverton City, this is what I would see when I log into the system using the user ID and password that we've provided to Riverton City. We only keep 3 months active. So if you've missed a month, if you didn't download 2020-09, it's not here for you to see. So it's important to, again, to be very conscious about downloading your information every month. Now, the information that we send out every month is pretty much the same as what we send out in the secure emails, except that we're giving you more than we did before. You'll notice that the very first file there that says additional transit local, that was not available in the old system, but it is now. And so if you have an arts and zoo tax, you'll get the detail for the arts and zoo. If you have a mass transit tax, you'll get all that detail as well. Plus you'll get a summary report, those bottom PDF files you'll get a PDF summary report for every tax that you've imposed that you've received a distribution for. Other than that, the information is very, very similar to what you were receiving before. Now, I have reached the end of what I have prepared. If you have questions, now would be a good time to ask them. I would just, if you have questions about any of your distribution, or if you need access to SOTA, especially if you need access to SOTA, please contact Brian Thatcher at that email address, and I've given his phone number. Any other distribution questions, feel free to contact me. So having said that, I see there's 2 questions possibly.
Yes, Jim, do you want to go ahead with those if you're able to see them?
Let me see. Okay, Scott Stevens is asking, if a local loses access to SOTA, how much history do you keep at the tax commission if needed? This is something that we don't really advertise, but if we close your account and then reopen it, we actually have history from the beginning of time in SOTA, but it is a bit of a pain to retrieve it because we have to go back and retrieve each month individually. And so we'd like you to do the work. We're too lazy to do it for you. Dave Muir asks, have we figured out why data and cell phone taxes have declined? Dave, I'm going to tell you just tongue-in-cheek now that you must not have been there last year when I did my presentation about the municipal telecom tax. In a nutshell, cell phone rates have declined. The consumer price index for cell phone service has decreased significantly over the last 5 years. So it's not that they have fewer customers. They actually have more customers, but because they're charging less for their plans, there's just a lot less revenue to distribute. And then Galen Rasmussen asks, is it still possible to have the industry classification included in sales tax distributions? If I'm not mistaken, the NAICS code is included in the outlet listing. And so there is a bit of a match that you'll have to do, a matching of the outlet listing to the sales. So you'll have to do some database functions there to get your individual city sales classified by NAICS code. Then Evan Nelson asks, do you think the reduction in unemployment benefits at the end of July will have a significant impact on sales tax revenues? Again, that was also thrown out as an option or a theory, and I don't see why it wouldn't, because we saw the increase in taxable sales in the month of April, and that could have been the stimulus. It could have been the unemployment. It could have been a number of factors, but I wouldn't rule out that the reduction in unemployment benefits would have an impact on sales. So you'll have to wait until September to see the answer to that one, I'm afraid. Okay, any other questions? Okay. Well, again, I thank you for the invitation to speak with you. I thank you for joining today. I hope it was helpful. Hope you gained something. If you think of questions along the way that you didn't ask today, feel free to email me, call me. I'm working from home, but I am available during my business hours, 6:30 a.m. to 4 p.m. Monday through Thursday, and sometimes Friday. Anyway, have a good day.